As promised, I think we have the management of Gravita with us.
Well, that's right. Gravita India, that's the first management on our show. They reported a mixed set of numbers because margins came in healthy, but the volume growth was a little bit lower than what Kotak was estimating. Also, if you see the overseas business as a percentage of the total contribution, it's come down to around 30%. We have with us Mr. Yogesh Malhotra, the CEO of Gravita India, who joins us on the show. Hi, Yogesh. Good morning and good to see you, Ben. Well, let's get a couple of basic numbers out of the way because the stock, after seeing a big run, has come in for profit taking. Now it's down close to 7%. Volume growth for the past quarter on the lead business was close to around 8%. And if I take the summation of lead, aluminium as well as plastic, it was in that vicinity of around 7 to 8%. For the first half of the year, I think it is close to 20%. For the year, what kind of a volume growth are you looking at? If you could help us out with that. What is the VAP contribution and the overseas business? Three numbers is what I'm asking you for.
So on a quarter-to-quarter basis, there could be some changes, but we give a rolling 4-year guidance. And for the next 4 years, that is till FY28, the guidance is 25% growth in volume terms, CAGR. And that remains intact. And this is at the back of some favorable policy changes like extended producers' responsibility, battery waste management rules, reverse charge mechanism that has come up only recently, which makes higher availability of raw material for the organized sectors.
So you're saying even for this year, Yogesh, just to clear the point, even for this year, you'll do 25%?
So quarter on quarter, there may be some changes, and year on year, there will be only some small changes. But yes, it will be in the same vicinity of 25%.
Should we work with 20 to 25% to be safer, or do you think that 25%?
Yeah, so 22, 23% to 27, 28%. So it will be in the same range only.
22 to 27% will hold you at this number. The overseas business as a percentage has come down to around 30%. Is there a slowdown in the overseas business? If you could give us a sense on that front, where do you see this number stabilizing at? And also VAP as a percentage of the mix, I think it's holding at northwards of close to around 40%. Where does that stabilize? Overseas business and VAP.
So around 45% of the total revenue is coming from VAP currently, and we want to take it to around 50%. So that also remains intact. In fact, the new target is to increase it beyond 50% also. And as far as the mix of domestic versus overseas is concerned, it will keep on changing from time to time, depending on where capacities are coming up.
Right.
So on a healthy rate, it's around 35% from overseas and 65% from domestic.
All right. Okay, we take that point. Just on VAP and export contribution itself, how does all of that tie into your EBITDA per unit? Because I'm looking at lead closer to 21.5 per kg. You have aluminum, which is 17.5 per kg. Where does this number settle at? And what does this mean for your margin lines?
So on a sustainable basis, the lead EBITDA numbers are around 18 to 19 rupees per kg, aluminum around 14 to 15, and plastic around 10 to 11 rupees per kg. But these will keep on shifting. We've earlier also mentioned that because of our global presence, we take advantages of where the prices are higher and then take advantages of that in terms of bottom line numbers. And if you see in the current quarter also, something similar has happened. So we have diverted some of the material into India where we get better margins. So that is also why the domestic sales have gone up. But on a sustainable basis, these are the numbers. And also there is going to be some pressure from the raw material point of view. But we expect some economies of scale, some operational efficiencies. And as I mentioned earlier, that, sorry, yeah, please.
Yeah, no. What we're trying to get at is that with all of this, where do we see your margins? Because they're about 10.7% in the second quarter. With the mix that you're changing, with the offsetting of economies of scale from the cost pressures that you have, where do margins stabilize and what is the trajectory from here on?
So the margins in terms of EBITDA per ton of different verticals would remain almost the same. There would be some slight increase of say around 0.5% in each of the verticals. But as the mix will change and the new verticals are more profitable, like plastic and rubber are more profitable, in percentage terms, you may see some increase going forward.
How much could that increase be?
Around 1 to 2% overall in the next 3 to 4 years. And it's not an immediate change, but in the next 3 to 4 years, you will see some changes.
All right, but plastic as of now is doing 10 rupees per ton, right?
Yes. Yes. So plastic is at a very basic stage. This is just seeing the shift that is taking place because of extended producers' responsibility, where we are developing new products to meet the market demand. And it may take some time, but eventually it will give you higher returns. But it's 10 rupees per kg on an absolute number. In a percentage number, this is much higher than lead, which is around 8%, 8 to 9%.
Got it.
In plastic, it is around 12%.
Got it. And your ROS will be maintained in the mid-20s?
Absolutely, it would be upwards of 25%.
All right. Another factor that I'm observing in the first half of the year is your working capital days. That's improved to around 86 days. Where does this number settle down? Because I recall when it used to be more than 100 days, it's come down to 85, 86. For the year, what should it look like?
So absolutely, because now this domestic shift is taking place where we are also going into more tolling arrangements. So the overall inventory days are going to come down. Again, in the next 3 years, we want to bring it down to around 65 to 70 days. And that will increase. I mean, that will come down to that level in a linear manner going forward. So this will create some free cash flows for us. I mean, if you look at the last quarter, also we've generated free cash flows of around 35 to 40 crores. So it will continue to come.
All right. Very quickly, the finance minister has allowed RCB on metal scrap. That's a positive for the industry, right? If you could just sum up in 30 seconds, how does this help you?
So absolutely. I mean, there are generally two economies running parallelly in India. One is the economy that is paying taxes, the other one that is evading GST, etc. So with this mechanism in place, I think that evasion of GST that is taking place will come down. It's a very it's a very good for the organized sector, and this will ensure that the raw material availability for this organized recycling industry increases. And even if you look at the last quarter, we have, doubled our overall domestic procurement in India. So we see this going forward also, the same trend will follow.
We appreciate you joining in, Yogesh. The stock has been a big outperformer in the last 1 year. Last two sessions, it's given up close to 10%. But the key numbers that you're giving us is margins will hover around current levels. You're guiding for volume growth of 22 to 27%. And ROS will be northward of close to around 20 to 25%.